All right, traders, ladies and gentlemen, welcome back to another Relentless recap. As you guys are tuning in, hit that thumbs up, and if you're a new viewer, consider subscribing to the channel. Guys, what a crazy day today on stock NEXI. We saw a beautiful move up and one of the biggest flushes we've ever witnessed here. Absolutely insane. So before we get into it, right, before we answer the questions that people always ask, right, which are Relentless, how did you find these stocks? What setups were you looking for? And how were you looking to manage risk on those trades? Before we get into that, let's talk a little bit about the disclaimer. Guys, day trading, if you did not already know, is very risky. In fact, we treat day trading like a business, and it's important to know that here in the States, 80% of small businesses fail within the first 2 to 3 years. All right. So day trading is risky. Understand that if you're new, even if you've been around, you're not quite where you need to be, utilize the simulators, utilize risk money, ensure that your learning curve is, ensure that as you go through your learning curve, your risk is, limited. All right. Other than that, remember the live streams and recaps are never an invitation to copy trade. And lastly, I do not invest for my subscribers, so be careful of the fake accounts. Lots of fake accounts out there. I will never message you first. I'll never ask for personal information or money. All right, let's talk about stock NEXI. And by the way, you guys see my MMU. Oh, here we go. My MMU t-shirt, right? We're looking pretty good. And we're feeling good here. We got on the sweet MMU merch. So, how did I find the stocks? Well, the same way I always find the stocks, utilizing Momo Pro. So Momo Pro is the scanning software that I use to find all the stocks that I trade. Right. So if we come on down here and we hit the Relentless Momo filter, you guys will see stock NEXI. In fact, is at the very top of the list. This is all the work I have to do to find the stock I want to trade. And when I show up in the morning at 9:15 a.m., I don't even use the Relentless Momo filter. I use the no filter. I feel like at the open, it just works better. It shows me the broader market stocks that are even below $1, which I sometimes trade. And from there I go, right? So that's literally all the work I have to do, which is great. Back in the days, people had to wake up 4 a.m. and read news headlines, and that stuff is gone. Now we have technology, luckily. So NEXI, I traded this one because it was up a good percentage. We had a high volume earlier, right? This finished up here around 60 million. And the float, right, the shares available to the public to trade is on the lighter side. So when you have a million shares outstanding and 60 million shares of volume, that creates a lot of volatility, and also that leads to an imbalance, right? Sometimes to the buy side, sometimes even to the sell side. And that allows for opportunities and pattern setups. SIDU, also one of the other stocks that I traded today. You can see up 69%, 14 million shares of volume. MTC might have moved up a little later here. I did not trade this one. ABVC I was also aware of, and so forth. So if you guys want to check out the scanner, utilize coupon code Relentless for 25% off for 6 months. All right. Now let's talk about the patterns. I'm not going to show any archive today. I'm not going to show any live recordings. So we're going to go straight into the charting here and talk about what we were looking at for stock NEXI. So in terms of the patterns, right, there were some price action trades that I looked at, but we're not even going to look at that right now. Patterns only right now, candlesticks only. So initially coming in, we wanted to see a bit of a surge, and we did get that to a degree, but it ended up being a false breakout. So we had highs at 744. Over that level of 44, we saw volume coming in, and it immediately pushed all the way to 780. Right there, 40 cents immediately out of the open. The opening surge is one of the patterns that we look for here as we trade every day. If you guys don't know the patterns that I trade, you can come to the course website. Don't worry, you don't have to buy a course or anything. You don't have to see the patterns, right? Just the list of the patterns. You can come all the way down at either chapter 24. Yeah, chapter 24 is a good chapter you can look at, right? These are the edges right here, right? So if we come all the way down, right, you'll see We have half and whole dollar patterns, right? Edges, right? You can call it an edge, you can call it a pattern. We have the panic flush. And where's the opening surge? The opening surge, there we go. Edge number 11, the opening surge. So the opening surge is the first pattern that I was considering and looking at. From there, we had a bottoming wick as this thing pulled back, and we started to get the 1 minute candle to make the new high. So over the high of 35, we pushed all the way to 58. This is another entry that we look at here. Boom, not bad. So there's two patterns. It even happened again right here. Over 52, it rips all the way to 76. But then we get a bit of a double top, and then it pulls back. Now, it's not a perfect double top, 80 versus 76, but 4 cent difference. That's basically a double top. So at this point, we're just easing off. We're waiting. The next entry that we see is going to be the VWAP pullback, the VWAP flush, right? It comes down hard into the VWAP level, which is this white line, and you can see how it springs back up. So from a low of 627, we get to a high of 659. So these are the edges and patterns that I'm looking at, right? Now you might say, Relentless, how are you looking to manage risk? And so, as we go through, there's more patterns, right? Right here, we had a higher lows, which is something we love to see. And it's a bit of a bull flag here, right? This bull flag pushes up. Initially, a little bit of a weaker candlestick here. But then we get another quick flag. And look at the explosion out of this one. Boom. Crazy, right? And again, it does reject up here as we got up to close to the 200 EMA, which is this pink line, right? And we know what the 200 EMA is, right? So in terms of what it can mean for resistance, right? We have a chapter 17, which is dedicated to the 200 EMA and what it means for resistance, right? So we were already expecting that we could have trouble up here on this flag, but we ended up, again, pulling back. So we were aware of where we were and what could potentially happen. So we can keep going in terms of more patterns, but for the ones that we have here right now, let's just talk about how I was looking to manage risk. And we'll also talk a little bit about the dollar amount and the share size, like the amount of actual money, like dollars, and the amount of size I was using to be able to get to where I am, right? So the opening surge, I did not take that trade, but if I did, my stop, so break of 745, there's the close, break of 745, right? And I'm watching to keep it as tight as possible. So this is what I would call, falls under the umbrella of a breakout or bailout trade, which means if I'm in and it's not going in the next moment, milliseconds, to nanoseconds, to 1 second, to 2 seconds, if we're not surging up, I want to cancel, I want to cut the trade, I want to get out of the stock immediately. And if I can get out break even, great. If it starts to come down with selling pressure, I want to get out as fast as I can to keep it as tight as I can. Because ultimately, this is a trade where there's a little bit of an unknown, right? The market right now, the sentiment is good, stocks are hot, but we don't know how much this thing can go over 45. Maybe it goes to 60, 70. Maybe it goes all the way to 8, maybe 850. Right here, it got to 780, which is 40 cents. So the goal is, if I can keep my stop as tight as possible, 10 cents, 5 cents, break even, maybe 15 cents, because sometimes they move so fast to the downside, you'll lose a little bit, right? You can't just get out flat every time. But if we could, we would. The goal is to keep it as tight as I can. And so on the days where we do explode, I get that discrepancy in the right direction, right? So, maybe I can lose on this stock today in that area. Maybe I lose 15 cents. But tomorrow when the trade works out, and it works out well, because again, stocks are hot, the sentiment for small caps are hot. When it works out, maybe I make 60 cents, or in this case, 40 cents. And if you lose 5 cents, or you're out scratch, or you lose 15 cents, and then you make 40 cents the next day, that's how you start to become profitable over the long run, right? So we pull back. Right here, the 1 minute candle is making a new high, over 735. Relentless, let's assume you're in 730, 735, 740. How are you looking to manage risk? The same exact way. If this thing is coming down at 25 and not looking like it wants to continue, maybe at 30 it's hesitating, it doesn't want to push through as where we're expecting buyers. I want to cut it flat, I can get back in. I want to cut it flat, I can get back in. I want to keep it tight. If it's not going to go and it's going to come down, I want to keep it tight. Because when it does go, we go from 35 to a high of 58, right? And there's another couple of cents. So I love to use the example of 1,000 shares. So right now in my order entry window, I have 500 shares. Let's bump that up to 1,000, right? It makes the math easy, and it's good for the example here. So in terms of cash, right? And we can also look at this example down here, but in terms of cash, right? For this example, it's 740, right? At 740, right? Let's pull up the calculator here. At 740, 7.40 times 1,000, right? We're going in with 1,000 shares. That's 7,400 bucks of actual cash, right? So this is the stock price at the time, and going back to 9:30 this morning at the market open. At 740, if I utilize 1,000 shares, I'll be using $7,000, worth of cash. Or actually, let's just put 7K. So it's 7K. So some people might say Relentless. How likely is it that you lose all your money? How likely is it that you lose this entire 7K? Well, not very likely if you're a very disciplined trader. For someone like me, again, if I'm in here at 40 and it's coming down to 30, 25, I'm going to try to get out as quickly as I can. Sometimes there are days where the stock just boom, like in a second. Even on a day like that where I lose more than I would have thought possible, or all that good stuff, I still sell. Even if it means I'm losing $700 and the stock drops all the way down and I lose 700. I know that over the course of time, with me being disciplined, keeping it tight, on the days where a stock like this does go all the way up, I can do extremely well, right? So for me to lose all of my money, this stock has to go to zero. It has to go from 740 to zero for me to lose $7,000 right here. How likely is it that I'm going to stay in this stock all the way till zero to lose all my money? It's not going to happen. Okay, maybe my power goes out and I come back and it's down at 6. Maybe I'll still, I'll lose a good amount, but that's part of the business. Your power can go out, your internet can go out, you can have some mistakes, you type the wrong stock, stuff like that. But that's what would need to happen for me to lose everything. What does happen to some people though, right? And this is where the discipline comes in. They're in at 740 and it starts to go down. But instead of selling, they go like this. Buy, 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 buy. Because maybe mentally, for whatever reason, they don't want to take a loss. Instead of taking a quick $70 loss, maybe it's hard to explain why people average down. But this is maybe one of the bigger issues in day trading. Instead of taking a quick loss, even if it comes down hard, right? Some people will buy. And what happens, there are days where these stocks do not go back up. Instead of coming up like this, they keep going down like this. And what happens when you buy so many times thinking, hey man, I just need a quick move up to get out small, small loss or back in the green. You're hoping for this, but it never comes. Before you know it, instead of being in with 7K, you're in there. Maybe some people, they might have, let's throw out a random number. Maybe they have 40K. Maybe they have 40,000 in their account, right? So instead of being out for maybe a quick $100 loss, $300 loss, they then say, no, I'm going to be stubborn. I'm not going to sell. I'm going to keep buying because I need this thing to go up. Before you know it, they're in 40K, $40,000 worth, hoping for a small bounce to get out flat. That right there is deadly. It's called averaging down. That's how people can lose money in this space. Because the way how I see it, If there's a strategy that's proven, like the strategy I trade, and you're following the strategy and you're disciplined, it's going to be hard for you to lose. Because and on top of that, we preach small share size, which means instead of even being in with 7K, maybe you're only in with $200, right? Maybe you're only in with $200. So it's going to be hard for you to lose money. But it's why you have to be disciplined. Because what happens if maybe you have cash sitting in your account to trade unrestrictedly in the United States in the stock market? You need your account balance, right? And my account balance right here, my account balance at minimum will always be at $25,000 USD, right? This is so I can trade unrestrictedly. If you do not do this, there'll be restrictions. You can only trade 3 times every 5 days, in terms of day trading, right? So if I have 25K in my account, but I know I'm a beginner, I'm new, and I'm only practicing with 200 worth, why in the world would I go and use 25,000? It has everything to do with discipline. You can't just one day say no. I'm without proving the process. There's no reason you should ever be in a situation. If you're truly disciplined, there's no reason you should ever get caught slipping, as they say in these streets, right? You should never get caught slipping because you're doing everything that's correct. And you'll use this 200 share, your $200, right? And let's come over here to E-Trade, NEXI. Well, what we can do is $200 divided by 7.4. That's 27 shares. You'll be in 27 shares practicing the same trade that I'm trading with my 7K, right? Sometimes maybe I get more aggressive at this point where I'm very experienced and have been doing it for a while. Maybe I go in with 20,000 on this trade, which would probably be around, let's say, 2,500 shares, right? If you're new and you're using 27 shares, right? Even if there's a mistake, or let's not even say mistake, right? Or maybe we could. Maybe your internet goes out, or maybe you click the wrong button to sell. You don't sell, and the stock flushes down, and you lost 70 cents, right? Times 0.7, you would lose $18. It's still a big loss for what you're doing and you practicing, but $18 versus somebody who went up to 40K size, maxing out their account, 40,000 divided by 740, right? What's this? They're in 5,400 size, but 5,000 shares, every penny the stock goes up or down, you're gonna make or lose $50. So if the stock drops down, so let's do 5,400. If the stock drops down 70 cents for that same person who's in now with much bigger size, right? Right? 70 cents. They're going to be down $3,700 in just that one trade. And so that's how you can really lose if you don't have the emotional control to say, hey, I decided today, let's say you're someone who's made it, you've gained experience, you've proven that you're profitable, you've sized up and you take this type of loss. You have to be sound enough to still say, I got caught in a bad area, I'm cutting it, that's it. I'm not going to keep forcing it and keep buying lower. Once you can do that and you can follow the strategy and be disciplined, it's very possible. We don't guarantee anything because nothing is guaranteed in this life. But with high discipline, you have to know yourself. Are you someone who's really high, who's highly disciplined? If you are, then you stand a great chance. If not, you have work to do. If you can't gain discipline, then maybe this is not the right field because there's going to be consequences if we can't stop out of the trades, So, this is essentially what we're doing here on a day-to-day basis when it comes to managing risk, right? Every time I buy, I'm looking for, in terms of like a ratio, can I make let's say 2 to 1, 3 to 1, 4 to 1, right? Can I have a 2 to 1 ratio or higher? A 3 to 1 ratio is even better. So two, let's fix that. Yeah, so I mean, you can even have 1 to 1. You can have a 1 to 1 ratio if your accuracy is super high, you can. But what this means is, hey, for every 20 cents that I'm looking to make, I don't want to lose 10 cents. I don't want to lose more than 10 cents. For in terms of risk to reward. If I can make 20 cents, I don't want to lose 10 cents. So if you're correct with this ideology here, if you're correct 50% of the times, let's say your accuracy is 50%. If you can live up close to this ratio, even if it's like 15, yeah, well, even if it's a little less, you can still be profitable, right? Even if it's 15 to 1, right? Or not 15 to 1, but 1.5 to 1, 1.2 to 1, 1.1 to 1. So if I get one winning trade and one losing trade, I'll still be net positive after this, plus 10 cents, right? So with a 50% accuracy, which if you go back to grade school, is you failing the class, with just a measly 50% accuracy, you can make money. This is part of the reason as to why my strategy works, right? So when you go to 3 to 1 and you're making 30 cents, you're making 30 cents for every 10 cents, in terms of like risk to reward. If you're 50-50, you're still green net 20 cents, right? And so forth. So with a 1.5 to 1, you're still going to be profitable, right? 1.5 to 1, you have your potential gain of 15 cents and your risk of 10 cents over 2 trades, you're still green plus 5 cents, right? Same thing going all the way down to 1.1 to 1. And that's if your accuracy is 50%. If your accuracy is above 50%, you can have a 1 to 1 and still be profitable, because it then becomes out of every 10 trades, out of every 10 trades, if your accuracy is, let's say, 60%, you're going to win 6 out of 10 times. And if you're at a 1 to 1, if you're 1 to 1 with 60% accuracy, you're still going to be net green, right? Because the four outlier losses that are there, you're going to subtract that from the 6. You're still going to be green, 2, right? You're still going to be green that difference in there. So with that, you really can't lose, man, right? You really can't lose. We ended at 2.2. Something that we didn't mention was this big drop where we almost like lost a lot. This thing went from 1097 down to 781 in about 4 seconds. If you're someone who bought high aggressively and did not get a chance to sell, this was the type of thing that could have wiped out your gains on the day and put you back red. I was in going up at 30. I was in at 30 right here, and I sold up at 65 or so, right? And then it flushed down, and I was thinking it's gonna hold up at 10, so I bought 10, and it just kept dropping. So I stopped at 970 very quickly, getting out. And another 2 seconds later, it's down at 780. So I almost lost like 4K right there, which would have put me to being red 2K on the day. And that is the risk of day trading, ladies and gentlemen. So hit that thumbs up. Once again, check out those links down below. It's been Relentless Trader, and I'll catch you guys in the next one. Stay safe, stay green, bright and early again tomorrow morning.